My 100 ringgit had become 110 ringgit. I was sold. Robo Advisors was something for me. In this video, we'll be talking about Robo Advisors and 3 reasons we use them. My name is Emir and welcome to the Millennial Finance. Over the past year, Robo Advisors have started to gain a lot of traction in the Malaysian market. So we have a lot of friends who have heard about it. They've heard about MyTheo and Invest, they've heard about StashAway, but they don't know what it is. So they come to me and ask, is StashAway something good for them? Singaporean-based StashAway was the first Robo Advisor to enter the Malaysian market. Soon after, it was followed by MyTheo, and then it was Wahed Invest. So I've been investing in Robo Advisors for over a year now, and I have 3 clear reasons why I like to invest in Robo Advisors. Let's get started. Firstly, Robo Advisors remove emotion for investing. They're a class of financial products that aim to operate with minimal human intervention. To explain emotional investing, I'm going to go a bit into hype investing. Hype investing is when an investment gets so much excitement around it that it starts to go up and up and up, and it creates a sort of a bubble. An example of this is the housing bubble in 2008 and the Bitcoin bubble more recently. What happens to a bubble though? It goes up and up and up, but eventually it pops. In 2017, you can see a classic case of bubble investing with Bitcoin. A lot of people started to get excited about it. They saw that they missed hundreds of percents of gains and they didn't want to lose out. So what did they do? They started to put their money in. But what's the problem with this? They didn't know what Bitcoin was. A lot of people were doing it, a lot of friends, a lot of family who have no idea what Bitcoin is or what value it holds, but decided to just put money in it because they didn't want to lose out on the 1000% returns. What followed though was tragic. In December 2017, Bitcoin hit a peak of $20,000 per Bitcoin. 2 months later in February 2018, the bubble crashed, halving the value to $10,000. Someone with a portfolio of $50,000 in Bitcoin would have lost half their value in just under 2 months. Robo Advisors are meant to prevent just this. I don't get to choose what stocks I want or what index funds I want. All I get to choose is how much risk I'm willing to take, whether I'm high risk, moderate risk or low risk, and the robot does the rest for us. Robo Advisors don't care what the flavor of the month is, whether Bitcoin is going up by 1000% or Netflix is going up by 1,000,000%. It doesn't matter to them. The only thing that matters to them is numbers, and numbers don't lie. In the event that their model identifies a weakness in a certain fund within your portfolio, they will re-optimize this portfolio and move out this weaker performing fund with something else that performs better. Now, I'm not claiming this to be foolproof. We'll never know how good this performs until we go into a real recession like in 2008. But until then, I'm going to keep investing and we'll see how it goes. Number 2, good portfolio diversification. What we want in a good portfolio is having a mix of different stocks. Currently, what I'm exposed to will be mostly ASB and EPF, where nearly 70% of the stocks I'm invested to are Malaysian based. So why do we not want stocks that are too heavy in the Malaysian market? It's because if anything happens to the Malaysian ringgit, we're screwed. So it's always good to have a good diversification in your portfolio, and that's what Robo Advisors do for you. It's good to have a diversification in your portfolio in terms of geolocation. So we have a lot of investments in the Malaysian market. It'd be good if we can expose ourselves to the US and the European market. Next, we can have different products. We can have stocks, ETFs, bonds. By company sizes, we can have small companies, medium companies, and even large companies. We want to have a different diversification in our portfolio. And lastly is by industry. We want to have a various amount of industries in our portfolio. So for example, technology, healthcare, bioscience, commodities. These are the diversification that we want to build a great portfolio that isn't too tied to one specific industry, country, company size, or product type. To understand how Robo Advisors work, it's important to first understand index funds. So what are index funds? Index funds are basically a basket of stocks where they track a particular component. So for example, the most famous index fund in the world right now is the S&P 500. The S&P 500 essentially tracks the biggest 500 companies in the US market and follows the movements of these companies. Other examples are the US small cap ETF. So what this does is it tracks small cap stocks, which means companies who are small yet to make it but have the potential for huge growth in the coming 10 years. And it tracks these basket of stocks and follows its movement. And lastly, there's even an ETF called the Alternative Harvest ETF. What this ETF does is it tracks companies that are involved in the cannabis business. So when choosing to invest in an ETF or an individual stock, it's always important to remember that having diversification is good. So if let's say I had $1,000 to invest, I could either buy 3 Apple stocks, which is $300 each, or I can invest in a Robo Advisor, which will split my money across thousands of companies with the same $1,000. That's the power of ETFs. The amount of diversification that I'm able to get with just 1,000 ringgit is not something that we should pass up on. The third reason we use Robo Advisors is because of the lower fees. The next closest thing to Robo Advisors in terms of investing style are mutual funds. What these two investment vehicles do is they pool funds for investors like you and I, and they create portfolios for their clients based on what they believe is going to happen in the market. Now, the difference stems from the point where mutual funds are actively managed by fund managers. These guys are professionals who are paid to manage these funds and to individually pick stocks, bonds, ETFs to make sure you get the best performance. On the other hand, robo-advisors, little to no human intervention. That's the difference between mutual funds and robo-advisors. Because of this difference, it's normal to assume that a mutual fund would cost more than a robo-advisor. This is because we have so many fund managers who needs to be paid their salaries just for choosing the stocks for you. Meanwhile, for robo-advisors, no one needs to pay that robot to do the work. In 2019, a quick search shows that average fee for a mutual fund is a 5% sales fee, which is something that you pay every time you invest, and 2% annually that you have to pay however well your portfolio does. On the other hand, robo-advisors in Malaysia charge only 0.8% annually, which is way lower than what mutual funds charge. To illustrate this, let's assume that I put 1,000 ringgit monthly. And let's say I put 1,000 ringgit in robo-advisors and 1,000 ringgit in mutual funds. The results of this are staggering. Assuming the same returns of 8% per year for both robo-advisors and mutual funds. After 20 years of investing, my robo-advisor portfolio will outperform a mutual fund by 100,000 ringgit. And these are purely coming from the extra fees that comes from a mutual fund. Having said this, I have to admit that I haven't really dug deep into mutual funds and whether there are some that can really outperform the market. So, I'm not telling you to completely rule out your mutual funds or to completely sell all of them immediately, but it's just food for thought. This is how I started using robo-advisors. Over 1 year ago, StashAway announced that they would be the first robo-advisor to gain a license to operate in Malaysia. I couldn't contain my excitement. If there's two things I love, it's finance and technology. When you combine these two together, imagine the potential. As soon as it was launched and ready in the market, I put in 100 ringgit to test the waters out. I didn't know if this was something that would work or if it's just a gimmick and it's going to give me negative 500% returns in the next 5 years. So, I put in a small amount and I gave it a shot. This deposit was in December of 2018. Now, this was one of the worst performing months of the year for the stock market. In January 2019, the stock market had recovered. My 100 ringgit had become 110 ringgit. I was sold. Robo-advisors was something for me. Now, looking back at it, changing my investment strategy based on the returns of 1 month of StashAway is not something I should have done. As luck would have it, 2019 was one of the strongest performing years in the US stock market since 2013. The S&P 500 went up by 30%. In comparison, the Malaysian stock market was at negative 7%. After my first year in, I've been getting more and more comfortable with the idea of letting these robots manage my investments. I've been consistently putting in a weekly deposit and letting this thing just run and run and run without really having to worry about it. It's the perfect start for millennials to get exposed to the US markets as well as European markets without having to need a lot of money. With $100, even you can join this journey now. That's it for today's video on the TMF show. If you found this video helpful, give it a thumbs up and share it with your friends so that you can help us help more people. Until then, my name is Emir and I'll see you in the next one. Can we do the cutscenes like one first? Second point.
Yeah, you can. So